Hello, everyone. It's Muhammad Zishan with you from Hub of Finance Transformation. First of all, we warmly welcome you to our HOFT webinar series 2023. And today we are really excited to kick off episode one of this series, that is Next Generation Finance in 2023, How to Get Prepared. First of all, we thank all of you for joining us from different parts of the world, and we are really glad to be sharing with you all the valuable insights and our experience in this area of finance transformation and next generation finance. So, this is going to be a 1 hour live webinar, and if you have any questions during the webinar, please feel free to drop your questions in the chat box, and we will try to address as maximum questions as possible during the Q&A session. And if you have any technical difficulty during the webinar, please feel free and our admin will take care of it. So uh, just kick off our session and with the agenda for the today's webinar. And this first section of the webinar is to move from trusted scorekeeper to strategic partner. Next generation finance we will talk about, then the evolution of analytics and what role it is playing in order to elevate the role of finance to the next generation of finance. And then the second section will be about the next generation XP&A that is going to be covered by my fellow speaker, Muhammad AlRubi. So before moving on, as many of you already know and connected with me through the LinkedIn, I am Muhammad Zishan, the founder and the managing director, as well as lead finance transformation consultant at Hub of Finance Transformation. I have more than 18 years of rich corporate experience. I started from PwC, then moved into the industry, worked on a variety of finance accounting, finance digital transformation project, including mega digital transformation project for the UAE federal government as well, and for many other private companies as well. And now I am working as a lead transformation consultant in my own consulting firm, Hub of Finance Transformation, as well as working as the chief learning officer in the Hoft Academy division of our consulting firm and the training firm, Hub of Finance Transformation. So that's all about me. So what we are today talking about is the traditional corporate finance operating models. These models are really outdated because the model accounting system that we are using today is 500-year-old accounting system, and that's the reason it is not well positioned to deliver on the today's demand. So that's why the traditional finance is considered to be a very having a scorekeeper mentality, transaction processing focus. More than 70% are working on that, and most of them are historically oriented. Whereas the today's business, they need a modern finance function with a true business advisory role, who has a commercial and performance focus. And most important is who is not only talking about the past, but also about the future, what is going to happen in the future and how can we make it happen by working closely in collaboration with our business partners. So as AI Pacino from the Willy Bank says, I want you to bring me the answers before I ask the questions. So that's what the modern CFO must help the CEO drive strategy and the outcomes, and they need to be very proactive. And that's where they can leverage the power of predictive and prescriptive analytics so that they can not only tell their CEO or management about what they already know, but what they don't know by hidden insights, uncovering some hidden insights and foresights that can really impact and influence the strategic direction and the decision making in your organization. So the payoff for implementing analytics is really large in numbers in terms of dollars, not only in terms of dollars, but also in terms of your job satisfaction and job security, because it will give you an competitive edge over other professionals who are not leveraging the power of analytics. So that's why the payoff is really large, and that's what we are going to understand in the upcoming slides. So if we talk about the partnering evolution during the last 3 or 4 decades, starting from 1990, we started as a record keeping accountant where the focus is more on the bookkeeping, reporting, compliance, and on the efficiencies. So here we are playing more the role to record and support our transactions and just supporting the business with providing some basic financial accounting data. Then when we moved to 2000, the first generation partner that we call as a supporting partner, where the focus was on the strong acumen and building relationships and contribute to the decision making, where we started to collaborate with the business and provide them with some useful insights and foresights for the business to make their financial and business decisions. Then, when we moved to 2010, the role of finance business partner emerged. So, this role is not new. This role has been there for the last 15, 20 years, where the focus is on using financial information to influencing and challenge decisions. So, here again, we are using some financial information, hidden insights, and foresights to really influence the decision, not only to contribute or support, but also to act as a business partner to our business functions. Then in 2020s, with the advent of big data and analytics, the data started to flow to the finance function and to the company organization from so many multiple sources, not only the financial data, but also non-financial data. And that's where the focus started to shift towards leveraging that data to drive some insights and foresights for the business. That's where the focus was on more on the analytics, and that's where we the term coined by our business training partners, Finance Analytics Institute, as the analytics business partner. He's the one who provide analytics insights and predictions to impact the strategic decisions by leveraging financial, non-financial data coming from multiple sources to drive or uncover some hidden insights and foresights for the business. So that's how the evolution of the partnering happened during the last 3 to 4 decades. And if we talk about the role of finance function, the technical skills, the commercial skills, as you can see on the X and Y axis, the two horizons, there's the commercial skills and the technical skills. And then on the Y axis, you can see the performance and the decision making and the reporting and compliance. So the role of controller, that is focusing more on the control, governance, compliance, and monthly reporting. He is having these two skills, or you can say capabilities, that includes the commercial skills, who should have understanding of the business, and the reporting and compliance with IFRS, tax, company corporate regulations that he is supposed to comply with. Then on the other side, we have some specialists who don't have a much business acumen, who don't have much understanding of the business, but they are very specialized, having a technical knowledge of accounting that includes IAS, IFRS, and also they are good in managing the performance of the company. Then we have a trusted scorekeeper who are focusing only on the reporting and compliance. They are not even involved in any decision making, but they are focusing more on the reporting and compliance and having some technical skills like accounting, IFRS, gaps, or tax knowledge. Our aim is to elevate the role of finance to the next generation finance in order to play the role of the strategic partner, as you can see on the right hand side, where he is being more intelligent and focusing more on the strategic side of the business. And here the focus is more on the commercial skills and the performance and the decision making skills. So that's where he is focusing on, and that's where the role of XP&A or FP&A or the finance business partner or the strategic CFO, you named it, there are so many terms, but they are in fact the one who has having a high, very strong commercial skills as well as performance and decision making. So as you can see, number of roles, as you can see, the role of controller, that includes governance, risk, the specialist, transaction processing, treasury, IFRS, GAAP, then trusted scorekeeper, variance analysis, costing, investor relations. The strategic partner, what he is doing, as you can see on the right hand side, he's involved in the strategic decision making, risk management, performance management, analytics, simulation. So he is all what he's doing is improving the business performance, improving the decision making of the company to make a better business decisions with a positive business outcomes. And he is using his high level of commercial and business acumen. So that's where the role of the strategic partner comes into play. So if we talk about the finance value proposition, as you can see on your screen, it started from the control and the governance. So if we saw the role of data is the compliant data, and as we talked about that, it's the role of the controller. Then if we move one step further, it's more about the process and diligence to optimizing data, capturing financial processes to deliver consistent and trustworthy data. So here the focus is on, again, on compliance and efficiencies, and that's the role of a specialist. Then we started to turn data into information, some sort of analysis, the trusted scorekeeper or financial reporting or MIS reporting to provide accurate, timely, clean information. And that's where the role of financial reporting analysis comes into play. Then at the highest level of this curve is to turn data not only into information, but some actionable insights and foresight, so that the finance is now transformed into a predictive powerhouse who use advanced analytics and toolbox to provide business leads, insights, and foresight to take them data-driven decisions. So here, the finance is driving the data-driven decision making for the whole organization by having a data-driven culture as well. So that's where our aim is to elevate the role of finance from the controller specialist to the role of a strategic partner as well, in order to create more or maximize the business value. So, what is the roadmap? Every person asks an approach to us on through the LinkedIn or through our email, that how should we implement analytics culture? How should we implement finance transformation projects in our organization? What is the roadmap? So here, as you can see, very, very practical roadmap that covers not only the systems or technology part, because believe me, finance transformation or digital transformation is not only about the technology. Systems or technology is just one of the key enabler of transformation. There is many other key enablers, mainly the mindset, the people, and the processes. If you are not focusing on all of these four enablers of the transformation to implement analytics or to transform your finance function to an analytics powerhouse, believe me, according to Gartner, more than 70% of the finance transformation project fails. They fails to bring the forecasted benefit to the business. Why? Because the focus is only and only on the technology without and ignoring other key enablers, whereas the mindset, the people, and the process, most of the project fails because of lack of focus or lack of alignment of the mindset, people, and processes. So if you don't have the right processes, you bring the best technology, you have the best people. If those people leave, you cannot continue, or you cannot sustain those projects, right? Then it will fail. If you have all the technologies, processes, but if you don't have the right people, or you don't have sufficient people, again, you cannot run the systems or the processes without people, right? Or without the right people. Then the most important is the mindset. If you have the right people, you have the skills, you have the systems, you have the processes, but if you don't have the right mindset, if they are still working just to support or contribute persona, not able to influence and impact, again, it's not going to make any influence and impact. So here, the journey should start from having the right mindset. Then only you can move from the level of reporter, commentator to the level of advisor and strategist. So you are not only focusing on the past or some basic analysis, but also you are generating some amazing insights and foresights that can help your business to drive their business performance. So if we talk about the mindset model, that is really very important, and that's also moved from the record keeping to the value creation. So the first role is the role of reporter. Here, the reporter is focusing only on the monthly closing, providing accurate information, reporting, even without any analysis. That's the role of reporter, or that's the mindset persona of reporter. If we talk about commentator, commentator is the one who is adding some sort of analysis that most of our finance professionals are doing. They are adding some sort of commentary, some sort of analysis. That is the role of, or having a mindset persona of commentator. Then if we start to elevate the role of finance, then we started to not only act as a reporter commentator, but we started to act as an advisor. we started to influence the decision making, to change the decision making in our business and with our board or with our management. Because why we are going, not only we are not just presenting them a sales or profitability analysis or financial ratio analysis or some basic variance analysis, but we are now digging more dive. We are integrating information from multiple sources. We are integrating financial, non-financial data to generate some hidden insights and foresights for the business that really uncover some hidden insights that sometimes business even don't know. Because if you are going to your CEO or to your management or board, and if you're telling them the numbers about the sales were down, by expenses up, in most of the cases they already know this. So if you are telling them something they already know, they will ask first of all what's there for them, and it's not going to impress or impact them anyways, right? Only thing in order to influence is to uncover some hidden insights and foresight that can really impact the decision making, and that can also not only something about the past but also what is going to happen in the future and how we are going to make it happen. So here you are not only providing commenting or analysis, but also you are advising as a strategic partner to influence the strategic direction of the company. Where should we invest? Where should we divest? Which markets we should enter? Who are our competitors? What are our market share? What are our external factors impacting our company? How should we change our strategic direction for the future? What are our strategic pillars? How should we prioritize our strategy? All of these questions, then you started to really act as the strategist, the strategic business partner to your business. Here, I can give you one very good example where we implemented analytics. So, at our client, the sales were declining for the last, you can say, for the last quarter. And when the finance function, they identified the reason and they asked from the VP of sales, the vice president of sales, and the sales, mentioned that there were a couple of deals which were slipped from one quarter to another. We lost some deals. Well, that was the reason the sales were down for the last quarter as compared to the last quarter and the last year. But that was actually not the reason. There was no insight in this commentary. So here you are playing just the role of commentator. You are just commenting, mentioning your analysis, what you got from the VP of sales. But when we apply the analytics in that organization by gathering data from multiple sources, financial and non-financial data, we identified a very high correlation between the sales and the tenure of the salesman in those regions. So the sales were down in some of the regions, the reason was it was because of the core. It was because of its high correlation with the tenure of the salesman. So that was the reason, it was a high correlation between the sales and the tenure of the salesman in those regions. That was the reason of the sales, because that salesmen were not staying for long. The turnover was very high. That then when we uncovered that insight for the business, it completely changed their perspective. They started to implement incentive scheme. They bring HR also, the VP of sales also get more better picture. How should I retain my salesman? How should I implement a more good working environment for our sales to stay longer and to bring good relationship with the customers and to drive the sales? And it helps, to improve their sales significantly in the coming years and months. So that's how we identified, using analytics, a very high correlation between the sales and the tenure of the salesman. Sales were the financial data, and the tenure of the salesman was non-financial data. That's how we identified and uncovered some hidden insights and foresights for the business. So that's where then it can be many other cases, like you can identify some correlation between financial, non-financial data, like your sales and the employment data or the unemployment data in your organization, or the inflation data, many things, right? So that's where you can change really the role. Before we close, just the 3 building blocks, if you are really planning to elevate the role of finance, or you being a finance want to transform your role into analytics business partner, these are the 3 building blocks that you need to focus on: partnering skill set, strategic leadership, analytics toolbox. Partnering skill set is all about standard reporting and analysis, communication with impact, mostly the soft skill side of your skills portfolio that includes teamwork, collaboration, business acumen. Strategic leadership is all about understanding of your strategy, your internal, external factors, your industry, your external factor, your competitors, your customers, the threats, the risks, all of these areas, the industry understanding. Then the analytics is all about understanding analytics techniques like correlation, regression, simulation, Monte Carlo simulation, all of these analytics techniques, statistical techniques, and analytics systems like artificial intelligence or other systems and technologies that you should leverage on. So if you have any one or two of these skill set, you cannot move to the role of analytics business partner, because let's suppose you have a very good understanding of the business, you have a very good strategic leadership, and you have a very good partnering skill set, you are very strong in communication, collaboration. But what if you don't have the real insights for the business? If you cannot uncover some hidden insights using analytics techniques, how you are going to make an inference, right? Then on the flip side, you have analytics toolbox, you have very good analytical capability, you have a very good understanding of the strategy, but your communication is not good. You cannot communicate with impact, or you don't have a good relationship building or team building collaboration skills. Again, you cannot make an influence and impact, right? So that's why the combination of these three building blocks is really, really very important in order to get your role to the analytics business partner, to in order to stand out of the crowd and really to make real influence and impact across your organization. With that, we are now at the end of the section one of this webinar. And also, before moving on, just I would like to quickly give you about the role of the analytics. As you all know, this is the last slide probably, and then you can see the role of analytics: descriptive, diagnostic, predictive, and prescriptive analytics. So here again, as we discussed already, the role of reporter, commentator, advisor, strategist. So this is just to sum up what we have covered so far in this section one of this webinar. So descriptive analytics will tell you what happened, and diagnostic analytics tell you about where did it happen. And then predictive analytics tell you about why did it happen, what might happen. So why did it happen? It's all about diagnostic analytics. Then what might happen in the future? It's all about the role of predictive analytics. How can we make it happen? It's about the prescriptive analytics. So more than 60 to 70% of the finance professionals still they are working on 80s and 90s, and they are simply just reporting on what happened, where did it happen, and to some extent why did it happen. But nobody is focusing on what might happen, how can we make it happen. That's where the role of advisor strategist comes into play, and the predictive and prescriptive analytics. And also you can see you cannot do all of these with the use of our Excel. Yes, Excel is a very powerful tool. We will continue to use it, but there are certain limitations on the Excel to do analytics. So that's where you need to leverage emerging technology like desktop statistical tool, visualization tool. There are lots of tools available in the market. So that's where you can elevate. Once you have the right toolbox only, then you can move on from average to world class only. So that's all with the section one. And now we are moving to the next section and the part two of our webinar. And you can see its recording as well using the link in the comment section below for the part two. That's all from my side. Thank you.